9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to the top stories today. Nvidia out with earnings, seeking to reassure investors after the latest results, getting a lukewarm response. The company's touting progress in diversifying its revenue. The company also announcing an $80 billion stock buyback.
Asian stocks jumping as oil prices hold, declines on easing concerns about the Middle East, with President Trump saying the U.S. is in, quote, the final stages with Iran.
Also ahead, Xi Jinping and Vladimir Putin sign a pact to deepen strategic cooperation, but there is no mention of a key gas pipeline project.
And I'm Haslinda Amin at the JPMorgan Global China Summit here in Shanghai. Geopolitical risk, China's economy, AI, and so much more in focus with a big lineup of exclusive guests, including the man himself, CEO Jamie Dimon.
Forget about all the worries that we had in the last couple of sessions about bond sell-off, inflation fears. Right now, it's tech front and center. That's really given enough tailwinds for Asia today. With the Nvidia results, certainly didn't really impress some of the investors out there, but at least it's enough for maybe the hardware space and, of course, the chip makers here in this part of the world.
Yeah, I mean, we've just gotten spoiled, I guess, with the type of guidance that Nvidia gives. But, you know, even amidst that or despite it or maybe even because of it, right, no nasty surprises there. So I think the other tech teams are really re-emerging today. I mean, yet again, it's another 6% day in South Korea. You guys probably just saw this red headline across your Bloomberg terminal right now. We talked about SpaceX and an IPO, you know, this OpenAI, the IPO conversation. They're lifting SoftBank 20% as I speak. So we're up 3% on the Nikkei, which is coming up very shortly on your screens. But the tech play is really showing up across these markets. And Samsung, too, we forgot about that.
Yeah, I mean, that was the, I guess you could say, 10:30 hour or 11th hour sort of deal that was set between the company and the labor union to avert that strike that was supposed to happen today. So there you go. Plenty of relief from investors there. We saw, you know, right now a surge in the shares here. So certainly you add the Nvidia news plus Samsung plus SpaceX IPO, OpenAI IPO. You add Anthropic news in there. I mean, I think there's plenty to deal with here today in terms of good news for tech.
Absolutely. And yields are down.
Yes.
Yields are down. So I think that's also providing some good platform for stocks to rally today. Just a note to, as we look ahead to the Chinese market today, a couple of big earnings are coming through today. Keep an eye on that. NetEase. There's also this resource story that's starting to emerge in the Asia Pacific. You heard about Indonesia yesterday, and China's actually also set to impose some mining controls on some strategic minerals. So we'll watch all those themes as we get into the thick of things today. But yes, front and center today will really be what's been happening in the tech space, given, of course, everything that's taken place. Right. For more in the Nvidia story, let's bring in Kunjan Samani here out of Bloomberg Intelligence, our semiconductor senior analyst, joining us from San Francisco. Kunjan, good morning from the Asia Pacific. Thank you for joining us. We're down in the after hours on Nvidia. I'm not sure if this is simply just a subpar relative to Nvidia results, or was just everything in the price going into the release of results?
It was more the latter. I mean, nothing about the results was subpar. In terms of the guide for the next quarter, which came in at 91, our checks suggested buy side was looking to cross a 90 billion mark, which they did. There were a lot of other positive fundamental things in the result, the 80 billion buyback, the segmentation now showing that the growth outside of the top cloud and hyperscalers is actually faster. And this is an area where there is much less competition versus the competition in the hyperscale cloud area is rising. So a lot of positives from the results. I mean, if we go back and look at last 7 quarters, we have seen this trend where the stock sort of climbs up slowly until the day of the results. And no matter how good of a beat and raise they deliver, usually the next day response is a little bit lukewarm.
Kunjan, what about the competition, right? I think about AMD, I think about Intel and what they're doing when it comes to CPUs and the like. And it seems like the competition is intensifying in some ways. Is there any sort of, evidence to suggest that, they're encroaching into this Nvidia space here right now and that this AI buildup can continue up until maybe 2027, 2028 now?
Yeah, the competition is intensifying. I think it's the more risk is from the ASICs, like the likes of TPUs from Google and the Trainiums of Amazon, rather than we would think Intel or AMD. But however, that competition is coming in of one particular segment, which was again the hyperscale segment, which is still pretty sizable, driving a lot of capex. But there's another 50% of the revenues to your neo cloud providers, to your enterprises, and so on. This is where Nvidia sort of has a monopoly. And this is where the ASICs don't really fit in. Regarding the duration of the spending, look, they have a clear line of sight to at least end of 2027 calendar, right? That $1 trillion demand pipeline safety net, so which continues to grow every single quarter. So we don't see any risk through 2027. It's sort of the time period beyond that, which is hard to forecast. And look, the capex cannot be continuing to grow at the same rate it has been for the hyperscalers, right? So at some point, we do expect normalization in terms of the capex. But what Nvidia is doing good is going after new markets, the new $200 billion CPU market that it outlined, going after auto, robotics, even though they are small today, is at least setting the stage up there as a first early mover. So when those markets do cliff, Nvidia can again enjoy a lot more billions of dollars of revenue from them.
Yeah, what Jensen Huang calls physical AI. Kunjan, the more transparency is always good, right? And the fact that Nvidia is saying, look at us, look at our earnings, and the fact that they're breaking down into this new reporting framework into two platforms. What are your initial thoughts on that?
Yeah, we really like that. I mean, for the past many quarters, in our own projections and estimates, we have been trying to guesstimate what is the growth from this new bucket. So it's great now that they are reporting and we have to guessing. And people were sort of missing the growth coming from these new avenues and really focused on just the top 4 CSPs. Again, the top 4 CSPs are important, but now when you think about 50% of this revenue coming from these new growth vectors, where again, very less competition, I think this will help investors look at and track at what's happening beyond just the top 4 players.
Kunjan, fantastic. Thank you. Kunjan Sobhani there, our senior analyst at Bloomberg Intelligence. Just reflecting what Kunjan just said, really across the analysts, there was really nothing disappointing about these earnings when you look at them, I guess in a vacuum, just to look at them very purely. And as you can see, just the bullish commentary coming through from a lot of analysts there on the street.
Yep, and other tech news as well. We talked about it. There's no shortage today. SpaceX has filed publicly for what could be the largest ever IPO. The filing revealed a net loss of $4.28 billion for the first quarter and a super voting share plan allowing Elon Musk to keep the company under his control. Sources say it's targeting a valuation of more than $2 trillion, which could eclipse the record set by Saudi Aramco back in 2019.
Meanwhile, OpenAI is said to be preparing to file its IPO. And of course, we talked about that SoftBank story, up 20% still as we speak. Bloomberg has learned that it is targeting a public debut later this year and that the company is working with Goldman Sachs and Morgan Stanley to make a confidential IPO filing as soon as Friday.
Yeah, the bankers are busy, Dave, to say the least. And it's a perfect timing to go to JPMorgan and their Global China Summit, which begins today in Shanghai, as business and economic leaders gather to dig into the forces shaping the world's second biggest economy. Let's bring in our Bloomberg Insight anchor, Haslinda Amin. She is at the summit with our very first guest. Haslinda.
Yvonne, you said it, the bankers are busy and the IPO market is thriving. We're obviously in the wrong color because it is a positive day. Let's get insights. Perspective exclusively is Kevin Foley, co-head of global investment banking here at JPMorgan. Kevin, good to have you with us. We talk about this optimism, yet yields are at decade highs. And historically, decade highs yields would mean unraveling of the stock market. That hasn't happened.
Well, first, good morning, and thank you for joining us here. We're excited to kick off the conference and the summit. You're right. I mean, there is definitely challenges in terms of higher rates and would defy a little bit of logic around that. But I also think you have to look at where we are from a historical standpoint. Yes, we've been in decade-plus lows, but where are we coming from? We're coming off all-time lows. It's sort of a what is normalized yields. And when you look at it, when I look at earlier in my career, yields were much higher than what we've all operated. So we've had an environment where both financial markets and from an economic perspective, a lot of businesses operated with a low rate environment. But yeah, does the 10-year treasury go to 5%? Sure. But I can point to earlier in my career where 10-year Treasury was north of 7%, and we operated perfectly fine as an economy. So there could be a what is normal. You can argue that what has been in this low rate environment over the past decade plus has been more abnormal.
But it is about inflation, right? It's sticky inflation. In fact, when you take a look at oil prices, according to Wells Fargo, a 1% increase in oil prices equals a 5 basis point hike.
Yeah.
That is like, we're looking at oil prices in excess of 50% from the start of the Iran war.
Well, the pressure that's happening in oil and the concerns around the Middle East is a major concern from an inflationary pressure. Right? When you look at it, it's not just about what the price is at the pump. When you start to look how that reverberates throughout the economy, supply chains, from fertilizers to other things that are part of everyday life for all of us, that is going to have real inflationary pressure over time if it is sustained. What is interesting is the market continues to take an optimistic view. When you look at oil futures, they're assuming prices come down later in the year. That obviously would ease off inflationary pressures. The longer this goes on, that concern will grow about the likelihood. I think it's interesting where you had, look at the Fed expectations around Fed cuts. We came into the year with expectations we were going to get cuts in this year. Right now, the market's pricing in a 50% chance of a hike later this year. So we do definitely have some conflicting signals. Inflationary pressure is going to continue to be a risk throughout the year. Even if you get a resolution today in the Middle East, there's one, it's going to have to ramp up and come back online. And there are other inflationary pressures out there.
It's not changing the appetite for deals, right? Talk to us about the deal-making activity right now around the world.
Activity continues to be very strong. When you look at it, particularly the equity markets, continue to see good secondary trading and the appetite and taking that optimistic view. That is translating from an IPO activity. We could see globally the most active year since we've seen in 2021, and you can make the case in the U.S. speculation about some sizable deals that could make this even an all-time high for what volumes could be this year. When you look here in Asia, we're up 50% year over year from ECM volumes as a whole. IPO activity will be flat year over year. That's our expectation. But Hong Kong, China, we expect to be up significantly. So there's a geographic mix shift into more Hong Kong, China. You look at the 10 largest IPOs year to date, 4 of them in the first quarter came out of Hong Kong, China.
How much stronger for the IPO market in Hong Kong, China? What are you anticipating? You say significant. What is that?
We think it's going to continue to be strong. Right? When you look at the secular themes of AI, robotics, and AI... Healthcare. You take on AI means a lot, right? From an infrastructure standpoint, the supply chain that goes on, the energy, which get both, and now we go back to what's happening in the Middle East and oil, energy resilience, and also energy related to the needs from an AI perspective. So all of those factors are driving. There is a concentration within the market of where deals are getting done, and they largely play into those themes.
And the IPO market in the U.S. as well. We had from SpaceX, OpenAI, Anthropic. I mean, these are massive IPOs. Will that be translating into more IPO activities elsewhere in the world as well? Is that going to encourage more activity?
Yeah, the IPO market, it tends to beget more activity, particularly when things trade well on the break. So if we see the continuation of things trading well on the break, that tends to encourage other issuers to come off the sidelines and getting deals done, and it feeds the appetite for more activity.
You talked about the IPO market in Hong Kong. It's mainly driven by mainland companies. I mean, what will it take for us to see non-mainland companies, non-Chinese companies IPOing in Hong Kong?
Well, I think you have to have a couple things, right? One is going to be from just a valuation, and you look at multiples, right? There's no doubt when a non-mainland land company is going to look, they're going to look across, if they've got options, they're going to look across markets. You do have to have some nexus to the region, right? When you look across markets, whether we're looking in Hong Kong or European markets or the U.S., you do have to have a nexus to the regions. So that's going to be an important part of it. I think if you get those things, you will see an increase of activity. In particular, as the education process goes through on some of these secular stories that we're talking about, the investor base becomes more and more knowledgeable about whether it's from the robotics to AI, this makes this market more attractive.
And Kevin, before we let you go, Japan also seeing lots of deal activity, yeah?
Japan's been very strong. You go back to another example where the 30-year is at its all-time high in there, but we continue to see good activity out there. We also think this activity is translating to good M&A activity as well. We're seeing the confidence within the C-suite of wanting to do more deals. We think bigger, more sizable deals and more activity will continue throughout the year. Obviously, there's risks, as we've talked about, and we'll see how those play out.
Kevin, great stuff. Kevin Foley, co-head of Global Investment Banking at JPMorgan. He is optimistic. He says, look out for more deals. David, handing it back to you.
Okay, Haz, lots more coming up there in Shanghai with Haz at the JPMorgan Summit, including conversations with the faces you see on your screens. Some might be familiar. Stay tuned for those big ones coming through over the next few hours or so. Counting down to the open of trade, about 14 minutes away, Shanghai, Shenzhen, and here in an extremely wet, rainy, and humid Hong Kong. This is the China Show. Welcome back. You're watching the China Show. So, just about wrapping up. Russian President Vladimir Putin and his Chinese counterpart, of course, Chinese President Xi Jinping, have signed a pact on deepening strategic cooperation, but there has been no mention of any, at least specific progress on a key gas line project. Our Chief North Asia correspondent, Stephen Engel, joins us right now from Suzhou. For an upcoming separate meeting. Of course, Steve's been very busy there on the mainland. APEC meeting coming up. Steve, wrap up what happened in that meeting so far.
Well, you're absolutely right. We were going into this summit between Putin and Xi. We thought maybe some ground could be gained for that long proposed and long negotiated Power of Siberia 2 gas pipeline that goes from upper central Russia through Mongolia to China and all the way out to Shanghai through Beijing. But it's a multi-year, multi-billion-dollar project that has been sort of hung up on negotiations for price and also commitment by China to buy. And Vladimir Putin arriving yesterday or the day before, actually, for those talks with Xi Jinping, the conventional wisdom was that he felt that he had some bargaining power given the oil price shock around the world, that perhaps China would like to secure a long-term supply of liquefied natural gas. Well, it turns out in the readouts from their meetings, this was not necessarily a high priority or a high. There was no results. Basically, we didn't get any progress report other than a Kremlin spokesperson saying the two sides have, essentially agreed to the framework. But again, there's still key details left to be hashed out. That has been the Kremlin's view for many years. So to basically reiterate that we're still down to the final details indicates that China is not necessarily ready to find a mutually acceptable contract for this gas. Keep in mind, China's imports of LNG actually last year started to decline. They are diversifying more into renewables. Yes. Would they like to have a consistent supply? Yes. But again, they would want at a better price, and they don't want to necessarily commit to X amount of gas per year. They want to base it on demand. Of course, Vladimir Putin, with its war in Ukraine going into a fifth year, is seeing some strain, heavy strain on the Russian economy. So they would like to see that sooner than later. Other than that, these two leaders just reaffirmed they're doubling down on their strategic partnership going forward as sort of a counterweight to the West.
And really a good timing to really have this APEC summit where you are in Suzhou, Steve, on the back, of course, of not just this Putin-Xi meeting, but also when it came to that Trump-Xi summit just a week ago. What's on the agenda?
Well, obviously, building resilience into supply chains is high on the agenda here as some 700 delegates converge on Suzhou for really what is the first major meeting of the APEC calendar. China is the host nation of APEC this year. Of course, we're going to have that high-profile summit in November, likely in Shenzhen, likely in November, where you could be seeing Vladimir Putin there. You could be seeing Donald Trump there as Xi Jinping hosts those 21-member economies in southern China to really showcase the technology prowess in Guangdong, and in particular Shenzhen, as an AI powerhouse, as well as Hangzhou up further to the north. But again, there's so many trade friction issues, no doubt, with the U.S. talking about possible Section 301 investigations to resume, the legality of tariffs, possibly as early as July. That could throw, this truce into disarray, obviously, between Trump and Xi Jinping on the trade front. So there are a lot of, regional disputes as well. The Chinese did allow the Taiwanese trade minister to come to Suzhou for this trade ministers meeting. How much of a voice, separate economic voice, will Taiwan be able to have at these meetings as sort of a platform before the main leaders summit in November is yet to be seen. Also, the Japanese trade minister has come here. He's going to have a press conference later as well. That will be very interesting to watch, to see if China and Japan can at least find some common ground amid what's been a lengthy economic dispute full of export controls and, restrictions of travelers.
Yeah, well, we'll see. No ministerial level meetings between the two just yet, but we'll see if anything comes out of Suzhou there. Steve, thank you. Our Chief North Asia correspondent, Stephen Ingles, in Suzhou, China for us. And subscribers can also get more on Putin's visit to Beijing and the impact on relations with the U.S. in our live Q&A. I'm going to be hosting that one in just about 2 hours' time. Bloomberg.com for subscribers and terminal clients. You can get the exclusive opportunity to ask our BN team questions. So that's happening at 11:30 a.m. in Hong Kong and Beijing, 11:30 p.m. if you're staying up in New York.
Yep. Please keep them on topic, though. You can ask them. Don't ask them anything. I mean, you can. Don't expect an answer.
I'll be filtering through them. No.
There we go. We're looking at this massive rally taking place across the region. The underperforming benchmark is up 2%. That tells you everything you need to know. A lot of the big tech plays are coming up on your screens. That's because of those, although the Greater China doesn't seem to be joining early on here in this rally. Lots more ahead. A preview of the trading day is coming up. This is Bloomberg. Right, welcome back. Some gains, but in terms of the coffee analogy, this one is just black compared to the one with extra sugar we're seeing across the region today. But it's still coffee. It's still going to pick you up. We're up 1% on the Hang Seng Tech Index.
Yeah, forget if the whole questions of whether there's too much froth in this whole trade here right now. I'm going to continue your coffee analogy, Dave. Yeah. Stocks to watch here. It's still the chip space as well, just given the surge that you're seeing across Korea and Taiwan names here. There you go. You're seeing the likes of SMIC, Hua Hong Semi extending those gains after Hua Hong Semi was up double digits yesterday here. So the Samsung news reaching a deal to avert that strike certainly is lifting the whole sector here. You're watching the China Show. The Open is next.
Welcome back. You're watching the China Show. Lots of things to talk about. Lots of things have to do with tech. The SpaceX IPO, this report on OpenAI. Samsung has managed to avert the strike. You have an Nvidia earnings, and that's really translating to gains. Some parts are showing up in the Chinese markets. For the most part, they're showing up across the region. Yeah,
when you have news of course, the Nvidia, it was a beat on all fronts, but still wasn't enough to really appease or at least surprise investors. But then again, I think it's still enough to really excite the whole supply chain, at least that, as Jensen Huang said, demand is still hyperbolic right now. So this AI build-out story can continue possibly until next year. 2028, according to our Bloomberg intelligence, says is where things get a little bit more maybe murky, right? You take a look at when it comes to the Open, though. It's with the Nvidia news. You have Samsung averting that strike. Then you have Anthropic news about how they can double their revenue from the prior quarter. You had all these IPO news when it comes to SpaceX as well as OpenAI, and SoftBank's up some 20%. Yeah. That's really what's really leading and driving this risk rally once again. So forget all those wobbles that we saw when it comes to yields are ticking up higher. I mean, the bond sell-off, at least for today, you could say is pretty much pressing the pause button in a big way. You are seeing plenty of risk appetite here. Onshore markets are feeling it a little bit here. You're seeing when it comes to Shanghai, we're up about 0.9% for the CSI 300. Shenzhen seems to be also pretty lit here this morning. Capricorn Tech, there you go. The chip plays are doing well. CATL, so the old sort of plays around renewables, around all these new physical AI sort of plays is still the next cycle here, according to Jensen Huang, right? It's not just about the hyperscalers. The narrative has changed into mobility, into the physical side of AI. You take a look when it comes to Shanghai crude, maybe that's where you're seeing why risk sentiment is being underpinned here by the fact that oil prices are coming off just a little bit here. We also have to talk about some of when it came to the mining sort of curbs around strategic minerals. That's something that we need to watch out for when it comes to the commodity space here today that China implemented. So we'll try to decipher what that means here. But then again, it's still tech in focus. Take a look at how Hong Kong is doing here. When you're seeing the likes of Samsung, SK Hynix up 6 to 9% respectively, we'll see how the big China tech plays play, because it seems like for now it is a mixed picture. Usually China tech falters when this side of the trade in Korea does well, right? So you are seeing Alibaba, Baidu falling some 1%, marginal gains when it comes to Tencent. Not much appetite when it comes to some of the big tech in China here today. Albeit we do still have NetEase, NEO, set to report earnings, so maybe some more when it comes to the EV side of things. But there you go. The chip side is looking pretty good. Chips are in favor here today after that Samsung, 11th hour deal between the labor union and the company here. So we were supposed to be talking about a strike today. That, at least for now, is in the rearview mirror here. It seems like the two sides have found some sort of agreement, and that's really lifting the chip space today across the region here as well.
Yeah, it's not a pun, actually. I'm just going to bend the term. They struck a deal to avert that strike. Some of the critical minerals, that's going to be very much in focus, right? So I think China's going to be imposing some limits. They haven't been specific on what critical minerals they're going to talk about, but this is really how the rare earth story started late last year, so I think we'll just keep an eye on that specifically too. So we talked about tech, as Yvonne was pointing out, right? So you have Samsung. SoftBank's interesting because you have two IPOs stories. You have, of course, SB Energy, and you have, of course, Open AI, but that's just to say that's lifting those boats on your screens. Taiwan CPUs on the back of the Nvidia story also coming up on your screens. So we are still feeling the tailwinds across that. And so apart from that, we're just coming off, of course, this big event that took me off live shows yesterday.
Yeah,
but
how was
not
it?
that I'm ranting for that.
We saw you with Kathy Wood. How was it at the Sohn conference in Hong Kong?
Did I really look like an auctioneer?
That was my first thing.
Yeah?
Because you were standing there, and then Kathy Wood was behind you, I think. Yeah. And you're just like,
I was going to announce my candidacy for
president,
for office. No, but it was a really good experience, right? So I think the focus in the morning session was on women's health and the opportunities there, and certainly I think the takeaway I got was, we talk about AI, people are sleeping on the revenue growth that biotech could see because of the application of technology. And then I had to come back. We had this meeting in the afternoon, right? So I had to come back, and I missed most of the stock pitches that the fundies came out, and really that was really the attraction of Sohn up until right now.
Yeah, it's always about the pitches,
the
right?
ideas, stock ideas.
So I think this year there was a ThyssenKrupp, Compaq Manufacturing, CNH Industrial, just some names. You can read it all on our BN story here today by our team. But it was interesting here. We got one person that was there also with her pick.
Yes, and in fact, she joins us today to talk about that. Just that. Our next guest, of course, joins us, as we were just pointing out, on the back of the conference taking place in Hong Kong conference. And in fact, joining us here on set is Krace Zhou, founder and chief investment officer at StillBrook Capital. A brief look at the fund, of course, about $1 billion. Invest across the greater Chinese markets, long-only strategy.
Yes.
20 to 30 stocks. Not underappreciated stocks, not so much index stocks.
Yeah.
So are you guys a value investor? How should I describe you guys?
We are a bottom-up stock picker.
Okay.
We focus on the quality of the company, the sustainable growth, and of course the valuation is the most important thing.
Okay, so what's the stock pick?
Yeah. So the idea I presented at Sohn conference yesterday was Yutong Bus. It's a China Asia listed company. The company actually has been listed in the China A for over 29 years, but it's forgotten by the market. It's a hidden gem. So what the company does is the largest bus maker in China, also largest globally. The company has the largest scale, lowest cost, and the best technology. So in terms of growth, the China bus market is rather mature, but if you look at the rest of the world, the EV bus penetration is only about 10%. So we still see like a long runway for growth. And this company, the most compelling part, coming back to the value investing point, is really the valuation. So this stock pays 6% dividend yield this year, 2026. So it's really arguably one of the most shareholder-friendly stories in the entire China-Asia space.
Do you think the export growth is sustainable, right?
Yeah.
And can it actually offset? I believe domestic revenue has actually declined in China.
Yeah.
Is it enough to kind of offset the structural headwinds that we're seeing in China now?
Yeah, so that's a very good question. So because the domestic market has gone through this prolonged down cycle, that's also the reason why this stock is a hidden gem. So the export earnings right now is about 80% of the earning for this company. And they have about 35% market share in China. But in overseas, it's only about 6%. In a market where the EV bus penetration is only about 10%. So we think the company is still at the early innings of the secular growth in the overseas market.
And, okay, so we're looking at the valuation now. Let's call it 12 times earnings. What do you think the multiple should be?
Yeah. So long term, the kind of the safest way to think about it is really the dividend multiple, right?
Okay.
So if the company can consistently pay out, like say, pay 6% dividend yield on this company, it's roughly about like a 15 times multiple. And the company is very capital efficient because they have completed majority of the capacity expansion already. So the company has the willingness and also the track record to pay 100% of earnings back to shareholder. So it's almost like 100% earning to dividend conversion for this company. That's why we assume 15 times PE multiple at the exit year, which give us a 30% IRR on this stock over the next 3 years.
Most people, I think most of the sell side has a buy rating on this. What do you think your view differs? Where's the kind of swing factor for you and why this is such a top pick for you out of the entire EV bus space now?
Yeah. So I think the sell side mostly focus on EV cars. Market is really confused with the EV cars versus the EV buses. So the EV cars, you have the industry heavyweight like BYD or Tesla, got a lot more attention from the market. But EV buses is really a tiny segment. Globally, only hundreds of thousands of buses being sold versus tens of millions of cars. So because exactly to your early point about China prolonged down cycle, that's also why the market kind of like just give up on the China EV buses, think it's really bad. But the companies actually enjoy recovery in terms of replacement demand in China. But more importantly, that's really the 80% earning coming from overseas market, which is at the start point of the secular growth.
What's the risk to your thesis, and what are you watching to watch for any sort of developments if that risk is coming to fruition?
Yeah, I think like probably two risks were really on top of our mind. Number one is about the ongoing execution and operation, because we all know the input cost is going higher among the auto supply chain this year, whether that's the lithium, the battery, the raw materials, the metals. So good thing for this company because they have export revenue, so they're able to raise price in the export market to offset the cost increase. So just from the first quarter results, they raised their gross profit margin by 5 points. So it's a margin expansion story despite the cost inflation. And the second risk is really about the geopolitical risk, right? So it's an exporter. But this company, they sell to over 60 countries. But there's one country they don't sell to.
U.S.
Yes, exactly. so we don't need to worry about that. Yes.
But they're still going, I mean, there's still frictions in Europe now about EV cars. I mean, do you foresee the same when it comes to EV buses?
Yeah, so that's exactly what market got confused with the EV cars and EV bus. So European country, they did impose a tax on the EV like cars, but they actually deliberately excluded EV bus because EV bus is so tiny. It doesn't really matter. It's not a target for politicians.
Okay. So your fund is about 20 to 30 stocks.
Exactly.
Most of them either have very little or no sell-side coverage. Is that accurate?
Some sell-side coverage, but I think the coverage probably have the wrong number in terms of their forecast.
Okay. So how do you get your information then?
Yeah. So for us, it's really about like underground coverage and also through the cycle monitoring of the business and also active dialogue with the company management. So in the example of Yvonne, we've been owning this stock for 3 years now. And we're still a buyer here.
Can you tell us some other themes in the fund right now that maybe the market is overlooking right now?
Yeah. I wouldn't say market is overlooking, but we are also incredibly excited about AI, as you can imagine. So we do think China offers a very unique value proposition for AI like versus US. So China is probably the only country outside US have this closed loop AI ecosystem. So that's everything from the model, the homegrown talents, to the infrastructure, the power, and also semiconductor fabrication, whether that's on the logic side or the memory side. So our research work would cover the entire stack for AI, but given the rising capex, as you know, where we're positioned today is mostly picks and shovels. But within picks and shovels, as GPU had a strong run, memory, and a CPU, so we are really looking for what's the next supply chain bottleneck. So for example, that's the optics opportunity coming from a data center interconnect. That's some niche devices and components in a data center power management, or some of the materials and chemicals being used in advanced packaging.
All right, the next bottleneck and next hidden gems.
Yes.
Krace, it's great to have you. Thanks so much for joining us there. Krace Zhou, founder and chief investment officer at StillBrook Capital. Coming up, we're going to be back live at the JPMorgan Global China Summit in Shanghai with co-head of global banking, Filippo Gori, who says it's shaping up to be a vintage year for deal making. That exclusive conversation is next. Let's head back to the JPMorgan Global China Summit in Shanghai for more on how the bank is reacting to not just what macro markets are doing, but geopolitical uncertainties. Haz is there with our next guest. Haz.
Well, that's right, Yvonne. We talk about, all the geopolitical uncertainties, yet markets back, risk on today. The volatility right there. Let's get exclusively to Filippo Gori, co-head of global banking at JPMorgan. Good to have you back in the region.
Thank you very much. It's a pleasure, always.
Filippo, we talk about the uncertainties in the world. Has that fundamentally changed the way your clients think?
Surprisingly not. When you and I met in Davos, there was the whole enthusiasm for how 2026 would pan out, and to a certain extent, it has delivered in that sense of if you look at from a pure banking standpoint, volumes, wallet is up year to date around 30%, and notwithstanding all the potential geopolitical headwinds and so on and so forth, clients still are engaging in deal-making opportunities, creating new companies and so on and so forth. So the year remains exceptionally positive.
But markets underpricing risk, you've said that before, and they continue to be.
There is a concern that the markets are pricing for perfection. And it's a theme that you hear when you go around the world. I was in Europe last week and in Asia this week. People are looking around and say, is this too perfect? So there is a little bit of a theme that people are asking, what about inflation? Is that, as Jamie said, the skunk at the party? Is there something there that could come and surprise people? So a little bit of that concern does exist.
In terms of the growth markets, the last time we spoke, you were bullish Middle East. Of course, the situation there has changed somewhat.
It remains, fundamentally, the Middle East remains an incredible growth story for the firm and more globally. There are a variety of different reasons why the Middle East will, in our opinion, will remain important, notwithstanding the current troubles. Yes, of course, things will need to settle down, and there will be a period there where things will need to recover, but we remain exceptionally positive on that part of the world, as well as the rest of Asia, obviously.
How about the rest of the world, right? When you take a look at activity, it does seem like when it comes to deals, outbound flows from Asia, from the Middle East to the US. Do you think that is sustainable given where we are right now?
It definitely remains a theme. And it's also a Europe into the US. You see that the rest of the world is looking at that fantastic engine of growth, which is the US economy. And most CEOs, most companies, the question they often ask is, how do I become part of that incredible engine, which is the US economy? So that looking west still does take place. Asia is booming too. We are in China, and what's happening with Hong Kong, China is super exciting too, but people still look at the US too.
What is super exciting?
about
in Hong Kong and China.
Well, look at the equity capital markets of Hong Kong and China have been booming this year. If you think about global equities, China represents around a third of the volumes that have been raised so far in both volumes and also number of IPOs, which is it's remarkable. And if you see the activity, you feel that there is that sense of excitement coming from this part of the world. The world lived a few years when I was still living in the region, where it went through a period of slowdown, but we have recovered with multiples, and the excitement is truly palpable. And at this event, when you have more than 3,000 delegates, is incredible. And
we were just in Beijing last week for the Trump-Xi summit.
Yeah.
It does seem like there's some stabilization in bilateral relations. Might that translate to more activities?
I agree. And the fact that the summit took place is in itself very good news. And there is a sense of de-escalation, which we, of course, support as a firm, and that will be positive for deal making, yes.
And you talk about deal making. There are certain sectors which are thriving more than others. AI is one.
Yep.
How are we looking at that in terms of the risks involved? I mean, this perpetual debate of AI capex?
So it is a topic that is heavily discussed in the US, but AI is for real, and it does change. It's a giant leap of mankind in terms of revolution of what we can and cannot do. So it's there to stay. The investments are definitely important, and what it will create also socially in terms of changes to the labor force is important too. But it's something like it's there to stay, and we need to be prepared for it.
And how are you looking at the capex? We just had Nvidia out with earnings, met expectations. You know, market's still a bit disappointed. When you take a look at the capex, plans are intact. $3 to $4 trillion. That's inflationary.
I would agree with you. Yes. So the longer term impact of productivity growth that will come out of AI will be deflationary. But in the short term, the capex and the build out that is happening around data center and some of the other affiliated topics has to be inflationary.
Still in the end, you're pretty optimistic about the business. Yep. How are you positioning corporate banking in...
So we keep on growing both globally and in Asia Pacific. We are keeping investing in bankers, covering more corporates, more bankers onshore in all the countries that we operate in the region. This is it's a region that is very close to my heart, having spent 12 years here. And it's a region that it keeps on growing enormously. And if you look at the headcount, for instance, in the mainland, it has doubled over the last 8 years. Revenues have grown 20% per annum over the last 2 years. So that growth of this part of the world is palpable, and we will keep investing in this part of the world.
And planning to hire more?
Yes.
How many more? Where? Come on, Filippo.
The part of the region that is interesting globally is, of course, the mainland, Hong Kong, China, the mainland, Hong Kong, Japan. There is a lot going on. M&A, defense, and activism in Japan, equities, Hong Kong, China. So there is more that we can do in
So hiring more in these markets,
yes.
Just to be fair. Okay,
yes.
Filippo, good to have you with us. Filippo Gori, co-head of global banking at JPMorgan. David, handing it back to you.
Yep, and we'll hand it back to you in a couple of minutes. Lots more coming up there, of course, with Haas over the next few hours here on Bloomberg TV, speaking exclusively with the bank's chairman and CEO. Yep, Jamie Dimon will be joining us at those times on your screens, and of course many others as well coming through out of the Global China Summit there in the mainland. Right, we'll leave you with a glance at markets, a bull in and outside a China shop. This is Bloomberg. Well, that's rare. For once, economists in Australia have this jobs number largely on target. So, cheers. What's the most popular bevy? Open up a can of Foster's. There we go. 1.7% to the upside. Joining the market stores, joining the overall rally. And of course, the drop in bond yields across the region is also contributing to what you're seeing on your screens. Is again a moment in the sunlight across the tech space. Samsung's managed to avoid, based on some reports there, that strike. Obviously, there's the Nvidia earnings. There's the SpaceX story, OpenAI, separately as it pertains to SoftBank. So it's all guns blazing here for tech today.
Yeah, plenty for you to chew on here beyond just the Nvidia story, right? Which, it seems like still wasn't enough to deliver for most investors. But Asia is still liking those earnings here, just given what we heard about the AI build-out, the demand picture, everything from Jensen Huang, and really this whole sea change around not just hyperscalers, but you're talking about robotics as the next sort of part of the whole AI cycle here, right? According to Jensen Huang. CSI 300, there you go. We're extending gains here. We're now punching about more than 1% higher here. Hang Seng is around that 25,750 level. In terms of your agenda here today, we talked about some of those when it comes to mining restrictions around critical minerals. We'll flesh that out and what that possibly means. Chip certainly is still front and center. We're talking about the JPMorgan China Summit as well. Earnings, including NEO and NetEase. Southbound flows are tracking as well. And of course, some inflation data out of Hong Kong today.
Yeah, that's going to be interesting. Inflation and looking at, of course, things like power inflation, which should be reflective of the pop in oil prices. We have lots more on the way in the second hour of the China Show coming up next.
Welcome back to the China Show. Here's a look at the CSI 300 a half hour into the session. It looks like we are also heading higher here today. 1.5% gains on your CSI 300. Chinex is doing a little bit better with 2% gains here right now. It's still not doing as well, relatively speaking, to the rest of the region here, just given the news on Samsung, given the news on this Nvidia earnings as well. So it'll be interesting to note, though, what really happens to the whole supply chain. Samsung, really, the news that they averted this strike certainly is helping. And I think Nvidia, the whole supply chain here in Asia, is liking those results too, and in the commentary from Jensen Huang.
Absolutely, and the fact that they're now more transparent in some of the growth areas outside, of course, of the hyperscalers, which a lot of people would kill for just a hyperscaler business, let alone some of the green fields and blue oceans that Nvidia has now laid out. So that's playing out. There's the Samsung story and perhaps averting, of course, that strike. That's also playing out across these markets, and of course, there's OpenAI. And SpaceX in separate ways are also separate ways just to underscore that they're rivals, but also obviously separately as far as some of their stakeholders are concerned in the Asia Pacific. Samsung's up 6%, Taiwan is up 3.5%, within the Kospi index, 6.5% there. And of course, SoftBank is one we'll talk about later on. In the FX market, it's one where it's been quiet of late, with the exception, I guess, of Indonesia, which reacted, by the way, yesterday. Already to that larger
50 basis points.
50 bips, right, out of Bank Indonesia. But apart from that, dollar Korea, okay, we're seeing a little bit of weakness there coming through there. Okay, why don't we get more context on these markets?
Yeah, let's bring in our team. Bloomberg Markets reporter Anthony Stevens is here, and in Singapore, we have our rates and emerging markets macro strategist, Marcus Wong. Anthony, I'll start with you. Has the runway been cleared now for this AI tech rally to take flight again?
Yeah, so the geopolitical kind of skies have cleared, right? You saw oil drop 5% overnight, yield move has kind of moderated a little bit, and we are back to real tech fundamentals. And there's a lot of good news, right? You have Samsung early resolving their labor issues, and then you have the Nvidia kind of earnings call was more important to the rest of the world than Nvidia itself. They highlight a thing that they've started to call the second category. So physical AI, robotics, and Asia has been up in front of that stuff, right? So you saw LG Electronics in Korea is up double digits. Hyundai, we're not talking about like the normal tech rally, right? It's really broadening out in Asia. And even in Taiwan, where you see the index is up 3, there's a lot of stocks that are limit up on the GPU, CPU theme. So it's really getting into the weeds now, and Asia wants to do that. The local retail investors have been doing that for weeks on end. They just want the macroeconomic noise to stop so that they can continue to chase these tech themes higher.
Yeah, and I think, Anthony, we're showing some of those names on the screen. So underscore for us, why is that a good thing, that Nvidia is now saying, everyone looks at our hyperscaler business, but look at this new gem, look at this new toy.
And it comes down to how the different ways of AI are evolving, right? So you have the LLM models, then you have people who are looking at building LLM processing on chips, then you have like specific physical AI chips. So you're starting to see a broadening of applications of AI. Each of those are throwing up chip making opportunities, revenue opportunities, and also the kind of components that go on those chips that help Taiwan, right? So as I was joking with Haslinda yesterday, you're starting to need an electrical engineering degree to follow this rally. But the skill set is there in Asia. We have a lot of electrical engineering degrees in this part of the world, right? And local retail is really on top of that.
We have to get more on top of it. Yeah.
Well, we have AI to do that too.
Yeah.
Exactly.
To fake our electrical engineering degrees.
We don't need to go back to school.
No.
Marcus, I want to get to you. I mean, obviously, Anthony says we can kind of toss the macro uncertainties aside, but then again, I take a look at what BI did yesterday. And the Indonesian central bank, with that go big sort of mentality, right? A 50 basis point hike, which surprised the market. I think only one economist foresaw this to try to stem the losses that we've seen, multiple lows for the rupiah. Was it enough, do you think, to really stem the declines?
Yeah. Well, unlike South Korea, North Asia, Indonesia doesn't have the benefit of AI or this tech super cycle. So unfortunately, yesterday what we saw is Bank Indonesia, going all orthodox, hiking 50 basis points. And interesting, as you pointed out, there's only one economist out of 41 surveyed by Bloomberg that was expecting it. I think going to the decision, right? Analysts were against. There was actually a sizable minority that was actually calling for even BI to hold. Pointing that inflation wasn't really out of control yet. Inflation pressures weren't like what we've seen in Philippines. So there wasn't, in a sense, you could argue that there was the balance of risk was two-way going to the BI decision. But they surprised everyone a 50 basis point rate hike. And what this signals is really how urgent BI sees the need to defend the rupiah. They've done a host of things, if you look at the SRBI rupiah bills, the whole invention of these bills was essentially to defend the rupiah. And we saw a massive issuance since April, as they sought to defend the rupiah. And as a result of that, the SRBI yields, the 12-month yields actually rose to a one-year high. In spite of all this, in spite of their smart interventions, as they call it, the rupiah, as you pointed out, have continued to fall to repeated, all-time lows. So I think investors out there, analysts out there, see there's definitely still downsides for the rupiah. They've announced different initiatives. Most recently, trying to curtail, the exporters and commodity exporters, but. Honestly, in the market out there, I think the big question is just how much lower can the rupiah go from this point henceforth.
Marcus, thank you. Marcus Wong there joining us from our rates and EM macro strategist team there from M Live. And then, of course, Anthony Stevens, our markets reporter. More on the Nvidia story. Let's bring in Maribel Lopez, founder and principal analyst at Lopez Research. Maribel, it's great. I mean, Asia certainly is feeling the positive effects from these Nvidia earnings. But I think for investors that hold the stock, I mean, it doesn't seem like anything sort of impresses them anymore. Not even this big buyback, not even a dividend, not even this news of, really the AI cycles shifting to physical AI now. But for you, what stood out to you from these earnings?
I think everybody keeps expecting an additional rabbit to be pulled out of the hat. And we're actually at a state of the market where, we're in the $80 billion category. Nvidia is actually the top of the market. So I think that is the issue that we're seeing right now is people are actually looking to see, will anybody challenge Nvidia, and is this the end of the run? Jensen used words like parabolic. I think we haven't seen the agentic AI wave really kick in for enterprises. We've seen a lot of investment from hyperscalers, as noted earlier. But I think people are saying, okay, how much more can they outperform? And they're doing well, but I think there was an expectation that was perhaps a bit unrealistic about what type of outperformance one could do, given how much capital spend is already happening in the marketplace.
Yeah, and maybe just to pick up on, if we could maybe close the loop on that. Investors, while largely bullish, have started to talk about early signs of maybe erosion to Nvidia's dominance. Is there any sign at all of that happening?
It's still early days. I think one of the things that people forget is that these are actually multi-year commitments. So while we've seen some very strong momentum by companies like AMD, it still takes a while to actually get a strong foothold in hyperscalers and neo clouds. And so this is one of the things that NVIDIA has continued to do well. Not only have they had good designs 1 year, they continue to have increasingly good designs. They're building a very strong ecosystem. So there's not a lot of reason to leave them, with the exception of price. So that seems to be one of the things. It's like, can you get a better price performance ratio? So we're starting to see that there's some opportunity for people to get a toehold, but maybe not to have a full shift from out of NVIDIA and into something else.
In terms of just overall, I mean, it seems like Jensen Huang was trying to really paint a different picture, right, of where we are in this AI cycle, right? It's not just the hyperscalers. I know they get most of their revenue still from data centers, but this is more about physical AI, about, robotics, about automation and mobility and the like. How exciting do you think that part of the story is for NVIDIA right now?
Yeah, so I think this is a long game and a short game discussion. I think in the long game, physical AI is wonderful, and that we'll see a lot of robotics and that it will be pervasive. But it is not something that you're going to see in the next 2 to 3 quarters. And I think that's where some of the lack of enthusiasm comes into it, because that means that in the short run, what you're really looking at over, say, the coming year is how much more money could this agentic AI wave add into it? And I feel that the market has considered that they've already priced that into the market, and that the physical AI side, when you're looking at physical AI, these are not cheap products either, right? So they're going into manufacturing, they're going into healthcare, they're going into life sciences. They're not going into people's homes today, right? So this is not a broad scale market. It's still a certain set of sectors that are still going to have to pay a very significant price for physical AI in the short term. So there's a bit of a disconnect between what the vision statement was, which I do think in the long run is going to work out for them, and what people expect will happen over the next, say, 3 to 5 quarters.
And what is the potential scale of the capex on that side? On the hyperscaler side, these are the world's biggest companies. I look at the balance sheets, I look at the capacity to borrow and raise money, and somehow the capex that they've put in doesn't seem to be unreasonable, unwarranted, or unattainable, if you think about it that way. But on the other side, physical AI, how much spend do you think will be on the table there?
The physical AI side, I think it's a little hard to handicap, in the sense that it's not a similar thing. So what happens is, with physical AI, a lot of times that is something that allows you to scale your production as a company. Whereas when you look at the hyperscalers, it's like, yes, I will buy AI, but I will also sell AI, right? So the question is, can you sell physical AI the same way that you sell AI? So you buy it and sell it. It's not quite the same equation that we're looking at. And I think therein lies the challenge with the quarterly revenue in the short term. It could be on the same scale as the hyperscalers, but the economics might not look the same, and therefore it might take longer to happen.
That's interesting, and might be a stupid question. Is that the same product? Does NVIDIA have the product for that category? Or cutting-edge product, world-beating product?
For physical AI, I think they've done tremendous work in terms of, and there are multiple stages of physical AI. That's the other thing I think people don't recognize. Physical AI doesn't necessarily have to go all the way to robotics. So there's a good scale of business that's in physical AI that's talking about how do we do simulations and digital twins, and all of that is actually could be considered part of the physical AI category. And then you get all the way to advanced robotics that could be in a manufacturing plant, could be in logistics, could be in a home. So there's definitely different waves of physical AI that they're going to capitalize on over the course of time. And then the question is, how much money is in each of those waves? And what kind of gains do the companies get from buying this? So if you're a manufacturing company, like, how much more efficient do you have to be to invest in physical AI? So that's, I think, the thing that's on the table is a question right now, like, when does that cross over for someone, and how difficult is that? And then a lot of the other things we haven't discussed is the energy utilization for all this, which is quite significant, particularly as you look at the global landscape.
Yeah, we haven't even hit the whole, what does it mean for the grid, Maribel. I want to switch to another top story today, which is, of course, the announcement of the SpaceX IPO. I mean, there's been a lot of rumblings of this, much anticipated. They're talking about a valuation of about $2 trillion, Maribel. These are quite shocking numbers. Do you think these numbers are justified?
I think everybody right now, given the amount of investment that's been put in all these markets, it seems like your opening bid for anything is, $900 billion. So it doesn't surprise me that we're looking at $2 trillion. So if you look at Anthropic, if you look at OpenAI, if you look at SpaceX, the vision of the future is that it will be very different and that these will be the mega powerhouses. These will be the Microsofts, the Apples, the Googles of the next generation. So I think that's where we get these kind of numbers when we're looking at it. And the spend to get there is dramatically different than what we've seen in these previous generations of technology. It used to be at one point you could spend millions, maybe $1 billion and get somewhere. And now we're talking, if you even look at hyperscaler spending on AI, it was like 200 billion, Meta, 145 billion. And that's just to offer AI. That's not even to like build and scale it, right? So that's what we're looking at right now.
And what about, I'm not sure how much you look at the ecosystem outside the U.S. and, obviously a big part of that is China, what they're doing and their sort of parallel system end to end. They're trying to achieve that, of course, when it comes to AI. I wonder what your broad thoughts on these two parallel stories.
Yeah, so I think what's happening in this space, which is really fascinating, is one of the things that I think is creating a drag on some of the U.S. stocks and the enthusiasm is that there is an assumption, and a very valid assumption, that the revenue that we might have expected out of Asia may not, in fact, materialize at the rate that we thought it would materialize. You've seen this in Nvidia earnings in terms of what it was going to be able to do in China and if it could do anything in China. We've seen a very strong chip ecosystem come in China. We've seen strong models that are being built in a global environment. So I think where we're moving is, particularly as there's been a movement towards sovereign AI, there's definitely been a discussion about can we grow, build, and distribute within a region in a more meaningful way. And I think that actually has the ability to break the concept of dominance of any specific region for a long-standing period of time. And I think that's some of what we're starting to see in really the enthusiasm that you've seen in the stocks this week in Asia-Pac.
Maribel, it's great to have you. Thanks for staying up for us. Maribel Lopez there, founder and principal analyst at Lopez Research. Still ahead on the China Show, we're talking AI and robotics. Yeah, no surprise. Yeah. With the co-founder and CEO of Elorian, a startup focused on visual reasoning. You don't want to miss that one. This is Bloomberg. Let's head back to the JPMorgan Global China Summit in Shanghai, where Haslinda is standing by with our next guest, a former Google DeepMind research scientist who's starting his own AI firm. Has a pretty timely topic.
Well, that's right. And also, this actually is an AI startup focusing specifically on visuals. Let's speak with Andrew Dai, co-founder and CEO at Elorian. Good to have you with us, Andrew.
Thanks, Haslinda. Great to be here.
And this visual AI, I mean, this is not something that has been a priority, but you say it's time to get into it.
Yeah, that's right. Visual AI has kind of been underserved. I would say there's so much going on in coding and math, and the models are advancing very quickly there. But in spite of that, visual reasoning is still working at kind of the level of a preschooler. So these, I would say, elementary school kids, they can do things.
3-year-olds, you say?
Yeah, 3 or 4 or so.
And just to be sure, when you talk about visuals, we're talking about, sectors like architecture.
Yeah, architecture and engineering. You can imagine like CAD, CAM, understanding these like technical diagrams. Also, there's areas like construction, agriculture. A lot of actual people say that white-collar work is going to go away, but a lot of that is actually visual work on diagrams or work like looking at crops and understanding what's going on with some disease.
But why is that important, and how would visual AI help expedite perhaps the whole process?
Yeah, so a lot of these current use cases are being covered with traditional AI methods like CNNs or traditional kind of like visual classifiers, object recognition. So they don't have the capabilities of, say, reasoning, the textual reasoning that these current models have. So we are developing models that have visual reasoning that can reason in the visual space and bring in these reasoning capabilities to these traditional, more dumber CNN type models.
And really, what is your edge in this? Is it about proprietary data or is it about training? What is it that you bring to the table?
Yeah, great question for a startup. Well, to begin with, we have a great world-class team. So our team has decades of experience on frontier models.
And how big is your team? From what I gather, you've had 12 people before?
Yeah, now we're 17 or so people. We're growing rapidly with a ton of experience. So we're going to essentially we're essentially building proprietary data sets. We're sourcing them, we're generating them ourselves, but we're also making changes to the model architecture, to the RL algorithms. So we're building a specialized model for visual reasoning all the way through.
It is a pretty niche area. I'm just wondering whether you see competition coming up. I mean, as you gain more customers, chances are people see the potential and they'll come on board as well. How do you view the competition? How difficult is it to go into this field?
Yeah, the AI market is very competitive. As you know, there's open source models and closed source models. But so for us, it's very important to move very quickly. So we founded this company in December. We're already 70 or so people, and we plan to have a model that's state of the art very soon, and that allows us to stay at the cutting edge. And then at the same time, we're talking to potential customers, potential partners who can work with us closely to develop better and better models over time.
Still in talks with potential customers. Have you secured any customers? And who exactly are you in touch with?
So we're currently in touch with some video companies, some entertainment companies, and some robotics companies. So
here in China, where might they be?
Oh no, these are in the U.S. In California, and there we're talking to them about how we can do pilots with them, how we can do data exchanges, so we can really build models that are useful for their visual tasks.
How soon do you think you might secure these customers? What are the indications so far?
I think the indications so far are pretty positive. There's a lot of legal paperwork, especially for a new company, that we are wading our way through. So hopefully in the next few weeks we can have an agreement.
Andrew, given that it is such a niche space, I'm just wondering how you are in terms of talent recruitment. Where are you with that? You're from 12 to 17, and as you look to grow, I imagine you need more manpower.
Yeah, so recruitment I found is very different from being at a company like DeepMind, which I was at for 12 years. Now it's a lot about selling the vision, selling the research vision, and I've had all that time of research experience. So people know my experience in the field, and they come because of that. But also I think there's a lot of people who are getting a bit tired of all the focus on coding and math, and they believe that AI can be more than just coding and math, and it can be and we should be making much bigger steps towards like getting things at the level of human capabilities, and multimodal visual reasoning is one of those where there's so much potential, so much more work to be done.
So has it been challenging getting the right talent on board?
I'd say it's a mix. We've had a lot of success in the last few weeks after we came out of stealth. So we came out of stealth like a few weeks ago with $55 million in funding from some partners, Striker Ventures, Menlo Ventures, and Ultimata. And that has really helped us accelerate. So people look at that and they see that the conviction these well-known investors have in us, and that really helps bring them on board.
I also understand that you've been approached for new funding, yes or no?
Yes, I have.
Okay, perfect. Andrew Dai, co-founder and CEO at the AI startup Elorian. Of course, the AI conversation continues, and we're looking for more conversations with the boss himself at JPMorgan, David.
Yep, that is coming up very shortly. So to our viewers, stay tuned, of course, for that conversation with us there on the ground. Jamie Dimon joins us in a short while. Plenty more ahead. This is Bloomberg. Welcome back. I had a look at flows data. Here's what's interesting, right? So would you believe Korea and Taiwan have both seen massive net outflows this month? In fact, Korea's at 25 billion. The only markets that have seen inflows, Japan. Flip the page, please, and that just underscores the AI story and who's participating in the rally. Japan inflows, Indonesia inflows, in Thailand. The rest of the region, outflows. We're looking at, SoftBank, of course, on the back of the tech story, and Asia building-related stocks on the back of this. I think regulatory tailwinds coming through out of the United States, and that's playing out across the region, which is, I guess, in some ways also painting a good picture of what's happening in Oz today, which is joining this rally overall in the region. Yeah,
so it seems like all signs point to higher when it comes to not just the tech trade here today, but certainly you're seeing risk sentiment improve substantially here just after this Nvidia results here. Also when it comes to, of course, Samsung bringing that start. We talk about all this good news when it comes to tech here. That certainly is lifting the mood quite a bit here today, despite the fact that Nvidia shares didn't really do a whole lot. But we got plenty more to come. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in just a moment. And I think for once we're not talking about the JGB market and really this sell-off when it comes to bonds, right? We're pretty stable when it comes to the JGB 10-year yield here. And really, a lot of the conviction is back in the equity market. We talk about SoftBank seeing double-digit gains here on the back of those OpenAI, IPO news, SB Energy IPO news. So that certainly is lifting a lot of the tech trade in Tokyo here. Topics is also up some 2%. There is news also of that extra budget and maybe some details from local media as well. So certainly there's a lot going on in Japan right now. Yeah, I think TBS is reporting around 3 trillion as far as that extra budget is concerned. I'm actually just looking at the story and I realize I can't read Japanese. So I guess maybe we'll just wait for the translation to come in and just to fill in the blanks. Asia Pacific, 2.5% to the upside. We're doing well. So on this tech story that Yvonne pointing out, so we talked about Nvidia and Samsung. The other pillars to the AI story, the tech story today, to be more specific, is this much-awaited listing of SpaceX and potentially OpenAI later this year. In fact, why don't we get to those stories today? Yeah, SpaceX has filed publicly for what could be the largest ever IPO, targeting a valuation above $2 trillion. The documents also reveal a net quarterly loss of more than $4 billion. Let's bring in Avril Hong. She joins us now with the details. So what are we learning about the SpaceX filing?
Yeah, it's a glimpse into the financials of the world's biggest private company, right? So we are seeing how its revenues have been rising, including for the first quarter, coming in at about $4.7 billion. But it's really a scenario of how revenues are not keeping pace with its expenses. And it's spending big on both AI compute infrastructure, but also launch infrastructure. So for its Starship rocket project, it's already splashed out $15 billion. You compare this to what Elon Musk had been projecting about 7-8 years ago, that this would cost between $2 to $10 billion. And on compute infrastructure and on its AI front, it's also spending. There's that cash burn for XAI following on from the merger just to keep Grok relevant. The other thing that we've also been learning is, I think, the sheer control that Elon Musk is still going to have on the company, because based on the shares that he currently owns, he'll still have 85.1% in terms of voting power. So it's going to make it very difficult for public investors to have sway or influence governors. A couple of things that these investors are going to have to contend with. Of course, we know how Goldman and Morgan Stanley are leading the way for this deal. Bloomberg had also previously reported that the marketing could come as soon as about 2 weeks from now. Following that, we'll get information on pricing, and then it'll start trading on the NASDAQ. And maybe OpenAI is jostling for attention and perhaps allocations here. Not that they're happening at the same time, but what do we know about OpenAI, and could that company be next? Yeah, it could be next. I mean, it's interesting for OpenAI because it's been locked in this legal battle with Elon Musk for more than 2 years now. And now that's kind of cleared out of the way because a judge threw out the trial, and this was after Elon Musk had alleged that the company was going against its initial mission of public good by becoming a for-profit company. So with these legal troubles out of the way, I think OpenAI would be very eager to get this IPO on the way. Sources telling Bloomberg that we could see confidential filing in a matter of weeks, could come as soon as Friday, and the goal is for it to go public in the last quarter of this year. And the context here is the rivalry with other AI companies, given how Anthropic is also racing to public markets. And this is coming at a time where Anthropic seems to be making a lot of headway. It could turn a profit in this quarter just from the sheer revenue jump, the popularity of its AI agent tools among enterprise customers as well. And if here the race is really who gets to the public markets first and secures these investors. That's not to say that for OpenAI there aren't these challenges, including concerns about its growth after it missed its own internal targets.
April, thank you so much for wrapping that as well. So this race to become a public company, and of course the agents behind that are the underwriters, and the
race within that too.
Race within that too, right? So the likes of Morgan Stanley and Goldman, some of them of course are underwriters here, but there's a really good story that we're
my favorite story on the Bloomberg.
I mean, the headline is just it's hard to beat the headline.
It goes to the commitment that Goldman Sachs' David Solomon went to try to ink this SpaceX IPO, right? The fact that they were actually first after Morgan Stanley in that IPO filing just goes to show, right, that apparently, according to our sources, he and his team try to work, and try to slide into Elon Musk's DMs just to land this deal. And this story also talks about just he commits usually when he tries to kind of lock these deals down.
That's about relationships, right?
Yeah.
Banking is really that. And they were together in Beijing last week.
Yeah,
right?
They were.
Yeah. Anyway, you can read about the story and how maybe this the race to get the business is fair game.
I mean, they said back during the Lululemon IPO, he came into a meeting all decked out in Lululemon. I mean, commitment.
Oh.
To Sir David. Certainly a great piece to read there about just the inner workings, of course, of the banking world. Look, in terms of Asian markets, as we get to that break, obviously there is this risk rally that is underway here. We got plenty more also from the JPMorgan conference in China as well. Greater China not doing as well, relatively speaking. Look at the Kospi, another 7% day. This is Bloomberg.
Okay, tech stocks are rallying, and yet again, the Starboard, the Star 50 is doing well. The Chinex index outperforming as well there. In fact, that's the perfect segue to get it back to Shanghai, and the JPMorgan Global China Summit is taking place. And Haslinda is there with her next guest. Has.
Well, that's right, Dave. It's not just about the markets. It's also about innovation. It's about AI. Let's speak to Sjoerd Leenart, APAC CEO and head of banking at JPMorgan. So good to have you with us.
It's a pleasure.
The place is abuzz with innovation and people wanting to know, where to invest and put their money in AI.
Yeah, you're right. There's 3,000 people here. More than half are from abroad, and many are new visitors. And I think they're amazed by what they're hearing, what they're seeing, the innovation here in China. Across a number of sectors, AI, clean tech, healthcare, you go on, they're just amazed. So I think that's one big topic, and but equally we're talking about all the things that are going on in the world, and that the market's kind of discounting at the moment, but could be obviously quite significant: geopolitics, indebtedness of countries. So there is two sides to the thing we're trying to do here.
Has sentiment shifted when it comes to the Chinese market and investing in the country?
Well, we know the government has worked hard to continue to stimulate the economy. We see the innovation. So there's a lot of positive things that have brought back investors into China. There's also things that are still being worked on. The real estate sector slowly recovering, but it's taking time. Consumer demand still nascent. So there's a mix of things, but I overall feel that investors have been pivoting back because they see a lot of upside in innovation that's going on in China.
Well, the question really is whether China is running, because the last time we spoke, you said, Asia can't be at full speed if China isn't running. Is China running?
China is running faster and faster, I would say. And you've seen places like Hong Kong benefit from that in all the activity we've seen in the IPO market. So, I think it's a very encouraging story.
I think what's changed within the last 12 months since we last spoke is actually Korea. There's been a lot of buzz in Korea, sentiment to do with AI and chips, and it goes beyond that as well. What are you seeing on the ground?
Yeah, that is an incredible story. I compared a little bit to what happened in Japan. Just the changes that the government brought to governance, also to the functioning of the capital markets. We see those same actions in Korea, and it's really put the market on fire. Now, it's driven by all the needs that the world has. That's in AI and all the hardware behind that. But it's also other sectors like defense, shipbuilding. And Korea is actually an amazing place to build those things.
So where exactly are you seeing deals? Because when you take a look at the equity market in particular, right, it's basically just a few stocks that are driving the rally we're seeing in the country.
Yeah, although that's not limited to Korea. We see the same in the US. But you're right, and that has its pluses and minuses. But one of the benefits has been it's really opened up investors' eyes to the other companies that are there in Korea, that may be in the same ecosystem, but maybe not so visible, or maybe in other industries that people have also realized have a lot of upside. And when you look at a lot of those companies, there's still a lot of upside. And that's actually why people continue to be relatively positive on the market, even though it's rallied a long way.
When it comes to Korea and the Korean equity markets, it's pretty much driven by the retail investors. Retail has played such a big role in not just markets like Korea, but also the US now about 60%, and a market like India. Do you see risks in retail driving up markets right now?
Well, first, I think capital markets are critical for the health of a country. So you have to have healthy capital markets. You see a high correlation between the success of a country and the strength of the capital market. And that requires both institutional investors, domestic institutional investors, international institutional investors, and retail. But anything, as in life, everything too much is not good. So some of that will have to balance out over time. But there is a lot of institutional cash in Korea that can be invested. There's increased international interest. And similarly, in places like India, you see that balance moving over time. But it's important, you're right, to make sure that nothing is excessive.
So India has taken a bit of a turn in the past 1 year or so. It does seem like foreign investors have been making exit in such a huge way. Is the India story intact? It has always been about growth, but when you take a look at where the currency right now, it keeps testing new lows, and the currency reflects the growth of the country.
Well, the India story in our minds is intact because it's a multi-decade secular growth story about a country with 1.4 billion people. Growing up and creating a middle class, building out industries. So I think that's fully intact. But you're right, there are some, medium-term, short-term complexities. And one of them is essentially money flowing into countries where hardware is being made for all the infrastructure build-out that's happening. And that is not a sector that's very dominant in India. So, and then there's the issue that the valuations haven't come down to a level where international investors have been enticed to come back. And you're also right about the currency. That is something that investors are looking at. They want to see stability in currencies. But overall, by the way, currencies is a big theme because with the increased inflation around the world, you're seeing a number of currencies sell off quite aggressively. And central banks, from really hoping to cut rates, now need to be very cautious to fight inflation. So it's not just an India issue.
Talking about currencies, yes, we're seeing weakness across the board in the Indonesian rupee, in the Korean won, and the Thai baht. Is that worrying for you? I mean, might this be the catalyst for something bigger?
Yeah, I think the underlying reason is worrying me. This is just a symptom of what's going on. That's essentially a world where inflation is going up because of, and being exacerbated by what's happening in the Middle East. And that's feeding through in fuel, but it will be in shipping costs, in other aspects. So that is fueling inflation. And we already had some inflationary pressures just the overall indebtedness of governments, the spending on infrastructure. So I do think that is something we watch very closely, and probably the most significant trigger for a further sell-off.
When do you see, I guess, a reversal in terms of sentiment? Because a lot of attention, a lot of capital is actually gravitating towards the US now, away from the region.
Yeah, and everyone's asking whether that is for real, whether AI is for real, and is it really worth all that money that's going in it and all these valuations. There's definitely an enormous amount of value in AI. So it's not like the .com where you put .com behind your name and you were worth a lot of money without a business model. So that's not what we're seeing. But it is fair to say that the innovation that we've seen in the US in that sector is enormous, and it's creating a lot of value, and people want to be part of it.
And we have seen companies, including AI, in their names and doing really well. So we'll leave it there. Sjoerd Leenart, JPMorgan APAC CEO and Head of Banking. Plenty more ahead for our conversations here at the JPMorgan Global China Summit. For now, Yvonne, back to you.
Yeah, Hans, we'll come back to you soon. More, of course, as she mentioned, from that JPMorgan Global China Summit coming up on Insight when Hans speaks exclusively with the bank's chairman and CEO, Jamie Dimon. This is Bloomberg. Welcome back. Here are some big stories that were flying around the world today. The U.S. and Iran have traded threats of escalation, even as President Trump says the U.S. is in the final stages of the conflict. Iran's President Masoud Pezeshkian posted on X that forcing surrender through coercion is an illusion and calling for mutual respect. Tehran has also warned it would retaliate beyond the Middle East if the U.S. or Israel renew strikes.
Everything's gone. Their Navy's gone. Their Air Force is gone. Just about everything. The only question is, do we go and finish it up, or are they going to be signing a document? Let's see what happens.
President Trump says he will speak with Taiwan's President Lai Ching-te as Washington weighs a $14 billion arms sale to the island. It comes after Trump's summit with Xi Jinping, where the Chinese president warned mishandling Taiwan could push the two powers toward conflict. Trump earlier said he did not make any commitments to Beijing about the pending sale. China has cut government spending at its fastest pace in 6 months in April, contributing to an unexpected slowdown in the economy. Bloomberg calculations show a broad measure of public expenditure fell 7.3% from a year ago, while fiscal revenues rose 2%. Beijing is still expected to ramp up, though, infrastructure investment this year to support growth. Beijing plans to impose mining controls on certain strategic minerals to ensure supply security. State media says the rules will take effect from June 15th, allowing caps on total output and mining operators, plus foreign investment reviews on national security grounds. Officials did not specify which minerals will be affected.
Okay, let's stay on the same general and broader theme here. So you might have seen this. So Indonesian President Prabowo Subianto announced the creation of this new state entity, effectively, that's going to be folded under the wealth fund Danantara to oversee, here's the point, commodity exports. And sources are telling us that the move has shocked some of the president's his own officials. Let's bring in, out of Jakarta, Eddie Spence, our commodities reporter, has more details on this story for us. And Eddie, fantastic reporting. Why don't we get started with what the market impact will likely be? So we're talking things like nickel, palm oil, coal. What are you hearing in as far as market reaction could be, if not already?
Well, actually, the market reaction so far has been fairly muted to this, and that's partly just because, frankly, the actual details on this policy are still very vague. The impact could actually be quite enormous when we consider the fact that Indonesia is the biggest exporter of thermal coal, nickel, and palm oil. And particularly the kind of relevance of these commodities has only been heightened by the Iran war recently. Coal is obviously a potential replacement for natural gas coming out of the Strait. So anything that impacts the flow of coal out of Indonesia could have kind of magnified knock-on effects at this point. But so far the market reaction has been fairly muted, but over the coming days we could see a lot of volatility as traders try and effectively position for the new risks that this policy has created.
Yeah, tell us about those risks. Given that you say it might not be clear what exactly the policy is right now, what are we still missing here?
Well, frankly, even people within the Indonesian government right now don't fully understand this policy. The speech that was given by Prabowo Subianto yesterday kind of sort of envisioned the creation of almost like a state commodity trader, which would handle contracts, for example, with the outside world. That would basically just entail growing state control over these commodity flows. And what we've seen with Indonesia in the past is that they're very happy to intervene in trade to attempt to kind of influence prices. So there's the possibility that we could see, shipments held back in order to boost prices. We could see shipments held back in order to try and tamper down domestic prices, which has been a common thing over the years in Indonesia. We saw it back in 2022 during the Ukraine war when energy prices shot up. So effectively, it entails more state control, or should at least entail more state control of these exports, which inherently kind of magnifies the potential for them to be intervened on and disrupted. And because these commodity flows are so big, I mean, they total about 65 billion when you account for all three of those commodities we just mentioned. The global impact could be potentially very severe, but it's still too early to say exactly what this policy will entail.
And Eddie, just take us behind the scenes. What do we know about how, I think the idea came up, was the motivation simply to bolster state coffers, for example, on the back of this boom we're seeing obviously in global commodity prices. What do we know about what happened behind the scenes here?
Well, the intention of this policy is to crack down on something called under-invoicing. It's effectively where you export something, but the declaration you make to the government is that its value is less than it actually is, which basically allows you to shift some of those profits offshore and avoid taxation in Indonesia, shift them offshore to a lower taxation jurisdiction. That's the declared aim of this policy. However, the issue with the way it's come about is that it appears that even many of the most senior people in the Indonesian government did not see it coming. This is something which has come directly from the president and his closest inner circle. The Sovereign Wealth Fund that we've heard so much about over the past year, Danantara, which is a creation of the president, is tasked with implementing this. But even some of the most senior executives there had no idea that this was coming, and now they're the ones being tasked with implementing it. And it appears like something which is going to be incredibly difficult to implement, given the scale of these flows that we're talking about.
Yeah, you mentioned in the story there, implementation will be key for all this. Eddie, thank you so much for the fantastic reporting there. Eddie Spence there, our commodities reporter, joining us live from Jakarta this morning. In terms of just what we're seeing across these markets, beyond just the commodity space, it's really one thing, which is, of course, the chips continue to do very well here today. Take a look how Samsung is doing, reacting to, of course, the good news that the company and its labor union have reached a deal here in the 11th hour. So averting that strike that was supposed to happen today. 6% gains for Samsung. SK Hynix is up some 10%. But we've been tracking, of course, everything from robotics and the like. The whole physical AI side of the trade is also doing very well. LG Electronics, for example, in the Kospi also lifting it, helping to lift things to 7% gains now for Seoul.
If AI was to become more widely accepted, right? It's more mainstream.
Yeah.
It's going to be affecting more stocks. I think is the headline of one of our Bloomberg stories, of course, on the Nvidia earnings, to the point Yvonne was making. It's showing up in not your usual names, but in a broader basket of plays today. So H is doing well. I think it's just a short way of saying that too. In terms of market breadth, it's certainly improving on in terms of the positive side of things. Hang Seng Index intraday, we are losing a bit of steam right now. We're about flat for the day. Same with the CSI 300. We are coming off highs of the day there as we approach the 30-minute mark to the lunch break, but we're still higher though by about 1%. It has, of course, outperformed onshore over offshore today. Has been outperforming. Press intense. U.S. futures, a look, and this really goes into the Nvidia story. In fact, as we speak, we are actually also coming off lows on this. We were down over 100 points on NASDAQ futures. We're now down about by half. So it's looking like the momentum is on the side of the bull.
I was trying to think of an analogy about how Nvidia investors are. They're kind of like the tiger mom, where you bring back the A's, you bring back you beat expectations, you beat everyone in the street, and yet it's still not enough.
But they still love their kid at the end. At the end
of the day, they still love it. Yeah, right? Yeah. You can't get enough of it. Yeah. Anyways, Jamie Dimon coming up next on Insight. You don't want to miss that one. This is Bloomberg.